It is Money Monday, and today we're continuing our month-long look at changes in the tax code this year. Today, we have Paul Hood with us, who's going to chat more about it. Paul, good to see you.
Good to see you,
Thanks
buddy.
for being here. All right, I like how we're doing this because there's a lot of changes to the tax code this year. Today, there's a deduction for some overtime pay. So what does this mean for people that are eligible for overtime and that get overtime? This isn't an exemption, right? It's a deduction. What does that mean?
That's right. So your overtime pay will still be reported on your W-2 and shown as taxable and withholdings and everything. But if your income as a single person is below 150, as a married couple, 300, then you can take a deduction. It's called above the line. So whether you itemize or take the standard deduction, it's an above the line deduction, so it's a great deal, of up to $12,500 per person. So both of you work and get overtime, then you can get $25,000. Now here's the kicker, Coop, is it's only for that half time.
Okay.
So if you get paid straight time for overtime, no deduction. If you get paid time and a half, then you can take a deduction. The challenge is that's not reported anywhere.
Right.
You know, back on when we talked about tips are reported on the W-2. There is no, that I know of, provision to report on a W-2 or anything. This is how much you got paid in the half time. The IRS just says, or Congress says, the employer has to report it, or to the employee. So we're just, it's going to be kind of a pain for people like me that help people with their tax returns. But you need to get with your employer and get some sort of statement that this is the amount of income that was the halftime. And then you can take a deduction up to $12,500, $25,000 for a married couple. It's a pretty good deal.
Yeah, definitely. So the employer is supposed to do it. I mean, as the employee, can you keep track of that if you have your pay stubs, I guess?
Yeah, just somehow, some way, this 25, because this goes 25 through 28. It expires after 28. That's the way they do things. Somehow, if you get audited, you got to be able to justify that number. The employers are supposed to give you, the employee, the information, but if not, you know, figure it out. But it's kind of wild, wild west in that area.
Yeah.
You know, we'll see.
All right, a lot of changes to the tax code. We're going to talk more about them. All right,
Yeah.
Paul, thanks so much. We appreciate it. And we'll be right back after this break. Stay with us.